analyst. Let's bring in Rebecca Teltscher, portfolio manager at Newhaven Asset Management. She joins me now. Thanks so much for joining me.
Thanks for having me.
So what is driving this? Is this just a bounce from oversold levels, or do you think that there's real momentum there?
With regards to the real estate sector, it seems like the focus is really on interest rates. I think all eyes are on whether the Bank of Canada is going to cut this week. I think the consensus is yes. I think with regards to the real estate sector, that's what's kind of pushing the momentum higher. I don't think it has to do with so much underlying growth in revenues or in earnings. It's really just more the interest rate headwind, tailwinds that they're expected to see. With regards to the utilities, as you mentioned, I think that's a little bit different. I think that interest rates falling would be a tailwind, but I think there is an underlying growth and a secular change that's happening in that sector that could push stocks further along.
And maybe to that point, that there are nuances there. It's maybe not just an interest rate play, because telcos are still the worst performing sector over the last month. So it's not a rising tide situation.
I think telcos, so leverage levels is important right now in some of these interest rate sensitive sectors. I mean, we're bullish actually on the telcos. As I've talked about BC before, you're getting a 9% dividend yield, and I don't think there's going to be so much of a revenue growth story there, but I do think that on a valuation side, it is undervalued, and you're able to clip a 9% dividend yield while you wait for prices to rise.
I guess we're trying to understand, is this just kind of a reversion to the means situation where you're bouncing from these oversold levels, or the beginning of a sustainable trend? Earlier I was talking about, there's a lot of chatter about small caps outperforming, that the environment is sort of ripe for that. Is the environment ripe for the kind of stocks that you like, which are those dividend paying, cash flow generating with a twist of growth?
Yeah, we don't try to time the market in terms of quarter to quarter. So we have a very long-term time horizon. So when we buy a stock, we're entering a position for 5, 10, 20 years. We'll own it for 100 years if the investment thesis is still there. So we're not trying to be cute in terms of timing where we are. So if you look at the real estate sector, as you mentioned, it's, driving the market. But we're really talking about a short period of time, maybe the past month or two since, Canada started cutting rates. But if you look on a year to date or even a 5-year, they're actually still negative.
That's right.
So, for us, when you have a long-term time horizon, I think it changes everything. So, we still like the utilities because, again, I don't think they're going to outperform in the next quarter. They may not. I think they're going to outperform in the next decade. And, the reason for that is there's just so many changes happening in the utility sector with regards to, the increase in electricity demand that's driven by the tech sector, with the amount of chips that are entering the market that require a lot of electricity, with reshoring and bringing jobs back to North America. I think that's also driving electricity demand, and also the electrification of the grid as we try to power off of, coal and higher carbon intensive utilities and replace that power generation with, wind and solar. You're going to need new transmission lines to bring that in. So this is like a long-term growth story, and that's why we like that sector as opposed to some of the other interest rate sensitives like the real estate.
So you're not super into real estate right now?
Not right now. I think we would look at it, eventually, but we're just, so first when you look at real estate as a whole, you kind of have to divide it out into the different sectors. So I think, the consumer, so like the Choice REIT, the RioCans, the ones that are the commercial REITs, we're not so interested in those. We have issues with, we're more cautious on the health of the consumer and what drives that sector. We think, industrial REITs, the barriers to entry are pretty low, and I think the valuations are still pretty high there as they come off of COVID highs. Office is pretty depressed, but we need to see, I think, we were waiting to see how that plays out. Residential could be interesting with the housing growth, but again, there's not that much new housing builds to look at right now. So I think with regards to REIT, you can't just look at it as a sector. You have to look at the individualized, subsectors and what the growth drivers are there, because they're all very different.
They're different, but they could get accelerated if we get in 2 days another rate cut.
Again, short term, sure, but am I convinced in the next decade that that's going to be, sustainable, growth? I'm not sure. So we're out of real estate right now. I don't want to say we would never be in it, but I think right now we focus more on infrastructure and we're playing out that growth in electricity demand, and I think that is a more prominent growth sector.
Preferred names in that sector?
So I like utilities, Emera, Fortis. I think right now one of my favorite would be Pembina Pipelines. They're very active on, the new LNG terminals that are being built in Canada to help export natural gas from the ports on the West Coast up to Asia. So if you look at Asia, I think 70% of greenhouse gases come from Asia. They're going to be looking in the next few years to, get off of coal and oil and replace, their fleet to natural gas, and Pembina is able to collect, toll or collect on that every single molecule change when they take the gas out of the ground, and they're able to process it and then ship it to the West Coast and then have it shipped out to Asia. So I think that's again, a secular growth. And despite where we are in the economic cycle, I think they're going to be able to withstand any kind of weakness and grow from here.
Rebecca, thanks as always for these insights. I appreciate it.
Great. Thank you so much.
That's Rebecca.